Good evening, ladies and gentlemen. This is Manoj Atri, your host for today evening, and I am a real estate agent with the Remax Hallmark. Thank you for joining. We have our mortgage broker expert on the line, and we will go to him shortly. And we will now begin with the normal format of our day. So let me say a hi to our mortgage expert, and then I will start with my regular format. Faisal sir. Yes, sir. Wonderful. Good to be inside the and doing a webinar. Outside is extremely not conducive.
I'm wearing a sweater for a reason.
Okay.
Usually I like to wear dressy clothes for these webinars, but today I'm sticking to the sweater.
Okay. Yeah. So I mean, it's supposed to be like a massive snowfall for this winter.
15 to 20 centimeter.
Yes.
And it is all in the evening time.
All
overnight. It's another
yes.
2 to 4. So I'm expecting a messy drive tomorrow morning.
Yes, tomorrow morning. I mean, like I think so. They say like it will clear, but it may take some time. Yes. Wonderful. So let me start with the agenda of the day, and then I will take it from there. Okay. Again, good evening, ladies and gentlemen. Manoj Atri, your host here. I'm a real estate agent with Remax Hallmark. Again, thank you for joining. And let's go through the agenda of the day today, and we'll walk you through the rest of it. As usual, I start with my real estate monologue. And today I'm going to cover one interesting article, and this has been one of its kind, that 6 people were able to join hands and purchase a property in Toronto. Quite an interesting format that they must have picked it up, and we'll go through that article and pick up some of the interesting aspects that will help us in our purchasing. So that's why I've picked up that particular article there for my real estate monologue. As we have been going along, and you have been with us for numerous home buying steps, today is our last CMHC home buying step number 5, which will conclude our booklet for home buying step by step. The entire source is by Canada Mortgage and Housing Corporation, and all the links and everything are in the description, so we will try to complete that. If I had some more time left on it, then I'll try to review another article, and we'll see. I don't think so we'll have time, but in case if we have, then we'll take it from there. We'll have our mortgage expert on hand here today, and his name is Faisal Garcia, and he will be reviewing the article with us also today. And next, we will also have him whenever we are going through the home buying, that he will be reviewing various nuances and intricacies of that article, home buying steps, with us today. So that is our agenda for today. And let me see if I can take you over to that particular article. So give me a moment here. And in case if I am not wrong, then I think so there is a lot of internet slow that we may expect you to weather. So in case if that happens, we'll handle it accordingly. And till the time the stream is okay, we'll keep on working on that. Okay, so let's head up to the first article of the day. Now, this article is how 6 friends pooled their money to buy a 1.3 million house in Toronto. Faisal sir. keep this is quite an interesting article, and keep a very close look at what I'm reading it out for you, and you'll find it very interesting. Okay, so now let me get through this particular first lines here. It was a simple mission, but an unusual one. A year and a half ago, 6 young people embarked on a journey to own a home in one of Canada's hottest housing markets, and that is also together. So this you will find absolutely one of a kind. This is probably what might be the first arrangement of its kind, allowed a half dozen young people shut out of the prohibitively expensive market to actually own a place, and they seem to be making it work. Okay, let's go through the next format here. It's really the only way that any of them could consider owning a home. So this has to be understood here, where both renting and buying present a real challenge to millennials. And that is why I am picking up this particular article, because whether it is renting or whether it is buying, it has become a challenge in purchasing it in Toronto. So and once you understand the nuances of these ones, we are picking up some of the details here that are extremely, like, very different from our normal formats that we regularly do. The average price of a home in Toronto was $787,300 in 2018. So it has gone extremely high, almost close to $800,000. So now, for qualifying for a property for almost $800,000, you're roughly looking at an income of anywhere between $175,000 and $200,000, which is not easy. While a condo was $552,000, almost $550,000, making it one of the expensive markets in Canada. So when the things have changed so drastically, it is for all of us to figure out alternatives. So that is where this particular article will give you some limelight into what is happening and where things are, where they're going. To put it into context, a household earning the median income in Ontario of about $74,000 or $75,000 can, with a solid credit rating, afford a mortgage for a home in the $415,000 range, which gets into you an entry-level condo. Okay, so that is where that is why an income of $75,000 will only get you into a condo. Detached houses in Toronto, on the other hand, come with an average price tag of $1.3 million, which is what they ended up buying collectively. Now, at this moment, let's get the mortgage expert there with the income format here. So let's head up to him and ask him if he can put some more light into this. Faisal, $75,000 income. Basically, that's what we generally explain to our clients, that they will qualify 4 times for a condo and 4.5 times maybe for a freehold property. Yeah. So are those numbers correct?
Those are numbers correct. It really depends on if there is any debt involved. But generally speaking, yes, those numbers are correct to get us what I like to say is mortgage money.
Mortgage money. And also, because sometimes we have also explained them, they can qualify almost all the way up to 5 times if their credit scores are excellent and no debts are there.
Yes.
That this makes sense. So that is when we are telling them like 4 times for a condo and 5 times for a freehold, in case if those factors come into picture.
Yeah.
Now, my next question in this particular article is, so if they're looking for a property close to 1.3 million, what would be their income should have been. Because after $500,000, you require even 10% down payment. And
Yeah.
is there any change after $1 million?
After $1 million, so good question. It has a lot of variables, and those variables have to be kept in mind. What I mean by that is, first variable is over 500,000, you need 10% down.
Yeah. So
Okay.
just to clarify, anything below 500 you can get away with 5%, but anything above 500 and above, you require 10% down payment.
Yes.
Yes,
So
go
let's just say, to put it into perspective, if you're buying something for 600,000, you need 5% of 25,000, which is, 5% of 500, which is 25,000, and then 10% of the remaining, which means 100,000. 10% would be 10,000. So 25 plus 10, 35,000 down. Okay.
Yes.
So that's the format. Now that's all the way up to $1 million.
Okay. What happens after $1 million?
After $1 million, you cannot go. CMHC and insurers do not insure those properties, which means you have to go 20% down.
Wow. Oh, even if the income is there.
Even if the income is there. So the last rule that came in made it clear that over $1 million properties cannot be insured. It has to be a conventional mortgage.
They'll have to change it somewhere down the line, because there are hardly any properties left below $1 million.
You're right. The way they classified it is above $1 million, it does not become a home as a need. It becomes more of a want.
Okay. Okay,
So
so different criteria. So that means if you're looking at anything above, now, if you're looking above that particular one, let's say, okay, let me ask you. So let's say, suppose you're looking for $1.1 million. So if you have $100,000 above the $1 million, will they now consider it like you're only borrowing $1 million?
No, the home has to be under $1 million.
Oh, okay. So the moment it becomes 1.1, that means you have to come up with $200,000.
20%
down
yes.
payment. Okay. Makes sense. Okay, so let's continue with the article and let's see next. The 6 people whose ages ranged from 28 to 38 years old pooled their money and made it happen. Okay. We need to go through exactly what is interesting for us. Not only is it complicated to secure a mortgage this way, most lenders aren't willing to do it without charging significantly more, and it could lead to problems down the road when it comes time to sell. You also need to be cool with living with a bunch of other people for the next while, not to mention figuring out who gets the best bedroom and the closet space. Interesting. This type of co-ownership arrangement is extremely rare in Canada. So rare, in fact, that it was a challenge to find any stats. The country's 5 biggest banks, RBC, TD, CIBC, Bank of Montreal, and Scotiabank, and none of them would answer our specific questions about whether or not this is a Canadian first. The consensus among mortgage experts connected with, including people who have worked at the major bank, is that this 6 friend, as opposed to 6 family members or couple deal, is unique and possibly a first. That 6 people, 5 women and 1 man, none of whom are romantically involved with each other, were ready and willing to participate in co-home ownership, turned out to be easier than finding a traditional lender who would take on this type of mortgage arrangement. This despite the fact that all 6 are gainfully employed and have excellent credit scores. Okay, I am just going to double check, but if the internet is down or not, but it seems it is working for my end at the moment. How is the internet holding up at your place, Faisal? You're muted. You're muted.
So far, no issues.
No, so far is no issue. So even I am like I'm checking it up on another computer. It is running there, so we are fine there. Okay. Now, whatever. Do you have to say anything at this particular moment of times?
I had a bit of a. When you said none of the banks wanted to confirm if it was Canadians first, I had a bit of a smile, and it would be hard for them to confirm. And from the sounds of it, it seems like that may very well be the case, but someone from statistics would have to confirm. In any case, 6 people buying together $1.3 million home. To me, it's starting to not sound very unusual anymore.
You remember a few weeks or more than a few months ago, we had picked up an article for co-home ownership. And that is where things are moving. I mean, see, in our last couple of discussions there, we had renting is going bonkers, like it's going crazy.
Yeah.
Okay. Airbnb has messed up quite a lot.
Yeah.
I mean, everyone would prefer to have their property on Airbnb instead of doing the normal renting. So lots of regular rentals have gone away.
Yep.
That has been one of the factors. Now that has like pushed our real estate to an to a different level.
Yeah.
So now someone will have to come up because you are unnecessarily almost paying close to $2,800 or $2,900 or almost $3,000 for a 2-bedroom, and one bedroom is $2,200-$2,300. You can get a mortgage for that particular amount. That means if you are paying $3,000, you're easily $500,000 or even $600,000 mortgage is there.
Absolutely.
And in that particular price range, you can procure a property. So if you can pay that much amount, then your income should be there to support it. And in case if it is not there, it is in better you join forces with someone and get this addressed.
Yeah. Okay.
Let's so the two things that we were picking up there is one of them is like co-home ownership, and second thing is if any of these bankers like are making it easy or not, because down the line they will also have to formulate something in order to lend money in this particular format.
Absolutely. See, times have changed. And I think Canada is experiencing this where other parts of the world have already experienced this. For instance, Asian side of the world, like Hong Kong and such, it's a real difficult to get a property or anything. Every property is just price is just out of control.
Okay. Let's head further into this particular one. Okay. They approached 2 major banks and the reception they received was mixed. One bank advisor who was open and willing to put forward our application with a decent interest rate to head office for approval. But that there was definitely an understanding that this was not their norm. They eventually found a traditional lender, Duca Credit Union, with a service specifically for co-buying that can accommodate up to 6 people on title. So the reason, Faisal, I was wanting to share this with you is okay, so in case if we come across someone with 6 people, so at least we have somewhere to bank upon. Like Duca Credit Union is working on it.
Absolutely.
All 6 of the housemates are on the mortgage. Can you see? Interesting. These are some of the interesting features here. Huh?
Yeah.
All 6 of them are on the mortgage, though their ownership varies from 2 to 38%. Now, so will the bank have absolutely accommodated all this 2 to 38%? Have you seen this particular kind of a format?
Nothing about this application is normal.
Okay.
So I'm sure they must have had to go through a lot of exceptions.
Okay.
Also, if you and I'm not surprised to see a credit union offer this compared to a large bank, and I'll tell you why. In the finance industry, if you look at the banks compared to credit unions, their lending criteria, their everything that the way they work is different. And even the first bank machine was installed by a credit union. So those things, and history speaks that in any case, it's not normal, and therefore there must have been some sort of exceptions. And the reason I can think of why it would be different percentage is because probably one of them had a higher down payment, the other one not so much. Because it's hard to imagine having 6 people all having same amount of down payment. Okay.
The important query I had on this particular one is, let's say suppose, I mean, you are buying with a normal couple, and let's say suppose even husband and wife. Now, have you seen like both of them, are they 50-50 ownership, or they can like come up with, okay, let's do 60-40?
I have seen that. You could have different percentages. Yes. I've seen 99 and 1 too.
Okay.
Usually, let's say parents are going on the title for mortgage and title holding purposes. I've seen 99-1. I've seen 50-50. I've seen 49-51. I've seen different percentages.
Okay, so
that
that percentage is existing, so that's not a problem.
Yes.
Okay. Yeah. Now the main thing here is like, even if the percentage is different, what is your obligation? Obligation is still full obligation, or still on the basis of the percentage?
You know what? I would consider it to be full obligation. Full obligation. Because let's just say one of them does not loses the job. Let's just say, and cannot make the payment. All the 5 are responsible to make the entire payment. Payment.
Okay. My that is fine. That is all. Let's say suppose they both are not able to pay, and it goes into a default or something, and the 1% person says, I'm only like, you can only charge me 1%. The other one has to pay the 99.
It's not that way.
Okay, it's not that way. Okay.
No.
So basically, whether the initial percentage is different, your obligation is still full.
Legally, you own that percentage of the asset, but you always owe 100% of the liability. Always.
Okay. So just to get a clear perspective on that. Okay, let's head back to that particular article. Okay. Other credit unions offer similar mortgage option, including Meridian, whose family plus friends mortgage allow a maximum of 4 co-owners. So just in your experience, you come across Meridian, which does family plus friends mortgages?
Yes, I have seen that.
Oh, it is interesting to know. So I mean, you can come on board with family and friends.
Yeah.
Okay. So okay. And there is also this is like maybe info for you. Vancouver-based credit union Van City offers a mixer mortgage for 1 or more friends, roommates, co-workers, or family members.
Yeah.
Have you
I've
heard?
heard of it. I've heard of it. Never. We don't end up doing mortgages in different provinces. So, but Van City is a very big credit union that's very aggressive, and must be creative as well.
Okay, now when you say like you have not used up in various provinces, so basically you stick with the Ontario ones, or you are
The
not allowed
licenses,
to go outside.
the licenses may make you restricted in the province. You can refer in
Okay,
another
okay, it's a
provinces.
reference. It's the same
Yeah,
thing with our real estate format. Okay,
yeah.
payments by her and co-owners on their 5-year fixed term mortgage are divided up based on ownership. Recurring costs like hydro and groceries are split evenly between 6 people. Wow. Okay, with an arrangement like this, although ownership is divided into 6 pieces, from a lender's perspective, it is a single mortgage for that house. That means if one or more people default, all 6 are on the hook. If this mortgage goes sour, all 6 co-owners' credit score will be negatively affected, and that will impact their ability to borrow in the future. Okay, now at this particular moment, does the mortgage default affect your credit?
Absolutely.
So they go and report everything there
Yeah, and on everyone's bureau.
on everyone's bureau.
Because the mortgage is on everyone's bureau equally. Well, when I say equally, it's 100% liability for everyone. So on the credit bureau, it seems like they owe the entire amount of the mortgage.
Okay, so
not the
basically,
percentage.
let me clarify this, because I was under the impression that the mortgage does not go on credit.
It used to be the case. It pretty much every mortgage shows up on the credit bureau now.
Oh, okay. So because basically, like what used to happen is ki if a person had one house and now he's going and looking for another house, so earlier it never used to be like, okay, this particular information is there, but now you're saying all these information is all there.
Absolutely.
So everyone knows how many properties do you own.
Absolutely. If you have a mortgage, it shows. And on the other side, lenders have also become a little more diligent. They ask solicitor to do a title search on the client and send that over.
Oh, okay. So basically, that is the reason everything is coming in place.
Yeah.
Okay, wonderful. Let me see if I have anything more to add to this particular article. But that is where this particular article had a few things for our interest. And the reason is like a new format is in place. And that is what I was wanting to highlight. Like in case if there are 5-6 people or even 2 or 3, there are like new things going on and happening in the market. So in case if you alone cannot purchase it, joint forces, it may be better than renting it out, and you will have to work out the details and the formalities between the two, and you can then take it over. But this was a new option which is on the table. Any more you want to add to this particular article before we head over to our home buying step by step?
All I will say is in the past, I've seen 2 families buy a property together. One of them take the basement, one of them take the main floor. And I've done a mortgage that way.
Okay.
It was a bit complicated. All 4 wanted to be on the title. I've seen it. I've had up to 4 people on title. It's definitely not a norm. I've also done a financing of a vacation property with 8 people on the title. Essentially, the lender asked them to open a corporation and buy it under a corporation and have everyone listed within that corporation to make it possible
Oh, okay. So, I mean, now the lender has to go after the corporation instead of going individually here.
Well, if they go after the corporation, the financing still says all assets and undertaking. There's a clause that says all assets and undertaking, which means that either way, all your assets are online, including every person in the corporation. They had to add that clause. But what I'm trying to get at is, if there is a will for financing, there is a way to make it work.
Okay. So basically, there are new alternatives, and people like, in case if they are finding they would like to stay in Toronto, they can join hands and forces, and there are some lenders who are willing to work with it.
Yeah, absolutely. And this is where things will change, because buying, as the article says, with the average amount of income, there's only such a big property you can buy, and those properties don't exist very many, because that's the low side. The average price is 500 something I saw. So all in all, our incomes are not keeping up with the value of the property, and therefore we will see a lot more in coming years.
Yes. So that was one of the numerous I thought like it's important for everyone to understand there are alternatives. It is and that is what we have to be aware of. Okay, let's pick up our article for the day today. So give me a moment here, and let me take all to that particular article there, and I will head over to our article there. And again, ladies and gentlemen, this is the main article that we are going to review today. I hope we are able to complete it within our program format. This is Homebuying Step by Step, Canada Mortgage and Housing Corporation guide, and we have completed up to step number 4 in our previous webinars. Today we are going to start with step number 5, and the step number 5 is making an offer and closing the deal. Okay, so let's head up to this particular article and see where we are going. Making an offer and closing the deal. Congratulations, you have chosen a mortgage that works for you, found a home that fits your budget, and put together your home buying team. Now it's time to make an offer and close the deal. So now, in order to make you have your real estate team and everything, and you are about to make an offer. Now, this is how you make an offer, which is called an agreement of purchase and sale. Once you have found the home you want to buy, you need to give the seller an offer to purchase. It is also called agreement of purchase and sale. It is a legal contract that should be carefully prepared by your real estate agent and or lawyer. Now, let me head over and so that I can show you exactly how this looks, and also then we can go there and show it to you. Give me 1 second. Let me head over to there. Okay, this is the agreement of purchase and sale, and all these links I will be adding it over to the description. This is where this is a easily readable form that you can read. Let me see if I can raise the zoom level of this one. It is good, but let's see if I can raise it further. Yes. So this is an agreement of purchase and sale in simple forms, and it states here, you can go through it. This would be the first page of the agreement of purchase and sale, and where you have your buyer legal name, seller legal name, real property, and fronting on, side of, in which city, having a frontage of, having a depth of. This is the legal description. This is the purchase price, both in numbers and words. Here is your deposit, and it is payable to whom, and then Schedule A. So let me head back to the article, and then I can guide you there further. Okay, so in the article you have your legal name, that is what I showed you as the buyer, name of the seller, address of the property, the purchase price, the amount of your deposit, any extra items you want included in the purchase. Okay, so let me head back to the article and show you where you add all those particular things in there. So it is irrevocable. So as a buyer, you are giving this particular time, that up to this particular time this offer is valid. You can also give your completion date, then like if everything goes okay, this is the closing date or the completion date of the property. These are the fax number for the agent for the seller side, for the buyer side, their email addresses, and this is where chattels included. This is where you add all the things like the appliances, the other stuff in the property that are without liens, and in case if you want to add over there, and other chattels, that is where those things are added. Okay, let's head back to the PDF. The closing date, a request for a current land surveyor. Yes, you can request in case if the property is very old. The sellers may not have that, and then you may have to rely on the title insurance, or you can order a new land survey, and it generally costs, depending on the size of the property, anywhere between 1,000 to 1,500 on a regular size, and if it goes a very big project, then it will be a completely different ballgame. The date the offer expires, so yes, it's an irrevocable date. Any other conditions, so all your conditions, whether it is conditional upon financing, conditional upon home inspection, conditional upon the lenders, the lawyers, and any other condition, like you may have a termite condition, you may have any other conditions, all of them are put in your Schedule A, and that is how you complete that particular one. Real estate agents, lawyers are thoroughly professionals, and they know how to put these together, and you can always get them again. If a real estate agent prepares it, you can also have your lawyer review it, and so on and so forth. You should expect to negotiate. Yes, your real estate agent will also be guiding you with the other comparables in that particular neighborhood, or if you're buying a condo, other units in that particular building, and so there is some negotiation both in price, in the terms, and in the conditions, and in the various formats of the offer. And that is where, if it's a power of sale, it'll be a completely different ball game. The sellers may have their own schedule, C or any other B, C schedules, and you may have to go through them also. While the process can be stressful, it is all about making the best deal for you and the sellers. Yes, both of you have to accept the terms and conditions, then only, and it is in the best interest of all of the parties, and that's how when things go for acceptance of the offer. Okay, now let's get over to the interesting part here, getting a mortgage. So now you have submitted an offer, and let me give you a process so that you can understand what exactly happens. So you have submitted an offer. That offer may have a condition of financing and condition of the home inspection. So you will have to give an initial deposit to show that you are keen on this particular property. And now you have some conditions to be met. You may get on a regular 5 days or 10 days conditions, depending upon how the conditions are accepted by all parties. And in that period, you then try to get your mortgage addressed and various other things addressed, a review by the lawyer, home inspection, appraiser, you getting more about the property taxes information, more about the heating and utility cost. So let's go through them. and one by one, and so that you can understand what exactly all are involved. Once your offer is accepted, visit your lender or broker to verify and finalize the deal of your mortgage. Yes, you may have a pre-approval. Now the pre-approval is that you are approved up to this particular amount to purchase the property. So let's say suppose you are approved up to $500,000. So that means you can go and look for any property up to $500,000, and when you have now narrowed down the building and put the offer, the banks or the lenders will also be checking whether that particular property qualifies for that amount of value or not. So they may go for an appraisal there. Be sure to review any conditions that were part of the offer. Your lender or broker can advise you on exactly what you will need to bring to the meeting, but the following information will likely be required. An appraiser. Yes, the bank may come and get an appraisal done, making sure that the value which you are purchasing for $500,000 is the value of that particular home. A home inspection report. Yes, I mean it has, you have to make sure that which property you are purchasing has the home inspector will go through the entire property, will tell you how's the roofing, how's the furnace, how is the basement, the windows, the electrical, the AC, the appliances, everything, and the water damage or structural damage, and blah blah blah, and a whole 9 yards with the home inspection report. So it is in your interest to have the property being home inspected, and so you can understand, I mean, once you purchase the property, are you looking for a huge bill waiting for you to be addressed? So a home inspection report will be an important. A land survey, very important to have a land survey. Now let's say suppose you want to add anything into that particular property, and you will have to go to the city, and a land surveyor will be required. You may end up with the boundary lines you would like to double check. A land surveyor will be required. You may want to check up your fences. You may not be in dispute with the other neighborhood, and the title of the property. All of those will be important information to be seen in a land survey. Estimates for recent or planned renovations and improvement, very important. The home inspection report, he may come and tell you may require these particular things to be done. Renovation, it's an older property, or it may be a few years old, but there may be some renovations that may be required down the line, and you should have a good estimate of that particular amount. Heating and utility cost. It is always good to know those numbers. You can always ask sellers for their heating and utility bills, and so that you can comprehend how much is going to be my per month amounts, and that will help you in understanding the heating and utility bills. If it's a condominium, the condo fees will be there, and then again you will have to make sure if the heat and hydro is included in the condo fees, if that is not included, and blah blah blah. The signed offer to purchase. Yes, the lenders will be needing a signed offer of purchase from you, that making sure what is exactly are they working with. The legal description of the property. Yes, it has to be made sure that the legal description is correctly there or not. The building specifications. Yes, what kind of a property it is, I mean, and what are its specifications. And if the home inspection report will also carry a lot of information on those particular things. Now, they may also be wanting to see some of the photographs of the building, and the listing may have lots of photographs. If the listing is not there, realtor.ca may have the listing at realtor.ca may be having photographs for it to be seen. The most recent property tax assessment. Yes, you should be aware of also what are the property taxes of that particular property, and how would you like to be paying it monthly or adding it to your mortgage, and all those things. Let's head up and ask our expert if he wants to add a few things on this particular one, and let's see if he can guide us with anything.
Before I start on the mortgage, can I touch something about the offer that you discussed, and
Absolutely. Feel free, sir.
Specifically just the chattel part? And this has happened to me couple of times, with not getting the offer in, but forgetting some things, and then buyer is upset that they never got this. And I'm sure you've seen it in the past, where expensive light fixtures, appliances are one, and many other aspects. But that was something that was stuck in my head, and I wanted to get it out. That check those chattels.
Absolutely. When you are on this particular chattel, chattel is very, very important. And these are the things that we always tell them, because the main thing here is, when at the time of the home inspection, take lots of photographs, takes the exact make and model of the appliances, and get them checked up by your home inspector, and everything that, like, see, the main thing here is, if you are, most of the time, they think if they have said verbally, it is included in there. No, it is not. If as a buyer you want something, you have to make sure, and it's not a regular chattel, you have to make sure you are itemizing it and writing it down there, and that is then when it is actually included. And also, so before closing, nothing gets changed or nothing becomes like a dispute. You need to have a proper addressing of all those chattels. Apart from that, even this has to be very important, whether the furnace is owned or it is a rental. That has also can become an issue. And whether any of these outside ones, like you have hot tub, are they included? Are they, like, everything is there? So make sure that it is absolutely written there and supported with photographs, so that in case if there is a change of an appliance, then you know it. And then what happens is, sometimes they see one or two fridges in the property, and then they figure it out, one of them is gone, and they thought that both of them were included. But it has to be written in case if they were wanting both of them, and that is also there. And sometimes this has also can happen, that the older one is replaced by the newer one, is replaced by the older one. You have to make sure those things are properly addressed in the chattels, because then it becomes a dispute. Yep. So it is in the best interest of, when you are making an offer of purchase and sale, everything, whatever you think is there, get it in writing and get it double checked at the time of home inspection, and so that everything is well taken care of. Go ahead.
Yep. It's just it's when you're buying a home, those things are small, but those small things really leave a bad taste when you're buying a home. So
not only, absolutely, they leave a bad taste, but the main thing here is, home buying is a very big expense. Sometimes you are scrambling for the last dollar also. Yeah. And now you have entered into a house and you're wanting to make something, and the appliances are not working. Where do you get that money from? Yeah. You are literally stuck. Yeah. So yes, it is a very, very important aspect of the chattels are. I mean, I cannot harp on this issue, that chattels are extremely important. It has to be made sure make is there, model is there, photographs are there. If anything that, let's say, suppose a mirror is on the wall, you have to make sure that in case if it's loose, whether it is loose or just like left as a siding, or it is like firm on the walls. So that has to be, the difference between fixtures and chattels has to be completely understood. And that is where the professionals are there. They will guide you, they will walk you through, and it becomes an interesting aspect of the whole offer.
Absolutely.
Yes, sir. Go ahead with the mortgage
So
part of it.
So the mortgage part, usually, as you said, 5 or 10 days condition exist depending on where you are. Sometimes there is no conditions because you're in a bidding war and you have to decide last minute if you're going to take a chance and waive the financing condition. But yeah, many different things come in, reviewing, everything from your income to down payment. Those 5 days, everything is being checked up. So I would suggest one thing that I experience is after putting an offer, the first 2-3 days, when the broker asks for documents because they were not provided before, it takes up the time, and it's eating into your condition of financing time, the 5 days. And if the client has not provided that, a firm approval becomes a challenge. So I suggest getting all the documents to the broker or the lender, wherever you're going, as early as possible. So if there are any challenges, those challenges are handled before going and looking at a home, doing the entire exercise of offer, making a deposit, so on and so forth.
I'm just going to add, absolutely, you are very much true on this particular part, that this 5 days are very, very crucial. And from your experience, you have seen that sometimes the lenders are taking even more time because of the volume of work that they are having. They're not picking up the files even in second or third day.
Yeah.
So it is in your interest, for your purchasing a property. Buying a property is not easy, and then you have narrowed down a particular property, which is not easy, and then getting the offer and everything, negotiation, that part is not easy. Get all the paperwork in line to your lender or to your broker even before you start going and seeing a property, because that 5 days is a crunch time.
Yeah.
In fact, you only get 4 days, because if you have a home inspection condition also, you would like to do the home inspection after your financing is done. Otherwise, you're wasting that much amount of home inspection money. And so these are crunch times. Make sure you even before you go and see any particular property, get your financing documents, paperwork, absolutely everything done, even to an extent, because try to visualize now you are in that 5-day conditions, and you have to accept even a higher interest rate, and you may not be willing to do that.
Absolutely.
Whereas had you done your homework, you would know exactly where you stand, what exactly rate you can get, how many things can be, like, does all the numbers work for you or not. Those are important works to be handled when you're trying to purchase a property. Yes, let me get you on a few of these ones, and you can give your info on this one. Appraiser.
Wow. A topic.
Yes.
A simple example. You're buying something for $500,000. The property comes in at $490,000. Now, and you're doing 5% down. You're doing 5% of $490,000 plus the $10,000 difference.
Okay. So that is one aspect of appraiser.
Yes. What does appraisal do? They're usually looking at all the comparables, the condition of the property, the age of the property, so on and so forth, to confirm that the value is supported. And appraiser is doing appraisal for the bank. It's not for your personal use. They do not share the report. They are obligated to pass it off to the bank only. Sometimes even the broker does not get to see it, depending on which lender it is. So an appraiser does the job of appraising the property, valuing the property for the lender's lending perspective.
Okay, second one, property tax. I mean, I know you guys do a calculation for property taxes in your lending format.
Mm-hmm.
So property tax information is equally important.
Yes. So when it is a resale property, MLS property, the property taxes are listed. However, let's just say if it is a brand new build done by a builder where the assessment is not done, most lenders want to use 1% of the property. So let's say if you're buying a home for 800,000, your property taxes are expected to be $8,000 on mortgage application. It's an estimate. If let's say there are some lenders that use 3/4, so 75% of 1%, and there are some lenders that use even half. So it really depends on where the property is and who the lender is, but it is only estimated when it is a builder built brand new property. When it is an MLS, the numbers are there on MLS.
Okay, that is one aspect. That is at the time of they getting the approval done. And second thing is, some of the lenders will insist that they pay their property taxes instead of you taking the option for paying it yourself.
Interesting. So when it is an insured mortgage, so let's just say up to 19%, it is an insured mortgage. It has to go through CMHC, Genworth, or Canada Guaranty insurance. And when it is an insured mortgage, the insurer puts that as a condition that the lender pay the property taxes, and therefore lender will insist on collecting it along with the mortgage payment.
Oh, okay. So it is guided by the bank. It can be also guided by the bank.
It can also be. So this, we're talking about insured mortgages.
Okay.
It is insisted by the insurer. Now, if you're going 20%, you have an option.
Okay.
And most banks will allow you to make the payments yourself.
Mm-hmm.
And the main reason being is the city that you live in has the first lien on your home, even before the mortgage does.
Yes, because see, I mean, when you add this property taxes in the mortgage,
Mm-hmm.
you're paying a bit extra.
Yes.
And if you start paying on your own, you may be paying less because you're not paying interest on top of that particular amount.
Most times there is no interest on it. However, there's usually a fee associated to managing that account, and it's blended in.
So I thought because they may be, because when they are paying it, they may add some other dollars to it. No.
There are other charges for the management, where because it does take some administration of collecting from the borrower and holding it until the property taxes are due, because property taxes are not due every month. They're due sometimes 3 times a year, depending on the city, sometimes 2 times a year.
Oh, okay. So they don't like have a per month kind of format that they are paying it off. No, they are holding it over. So they are okay. Makes sense. Okay, let's head over to another one that you may be off this much. Okay, let's head over to the next part of the article. Okay, now this is an interesting aspect that they have tried to explain it to us, and we will take it on this particular one. Don't forget to change your address. You need to notify healthcare professionals, government agencies, service providers, and several others when you know your new address. So now you have purchased a property, and don't try to change before you have finalized the deal. Once the deal is finalized, your financing is done, your home inspection is done, you have confirmed the deal, that's the time when you should be start going and updating everyone. Now, CMHC has also given a checklist in the workbook. Let me see if I can get that workbook moving, and so that now you can understand everything in there. Okay, let me head over to the home buyers checklist. Okay, this is again two workbooks that I've been discussing with you. This is a home buyers checklist and it's a workbook also. So this is where, again, all of this information is in the description. You can go through it, and when you will go through this particular checklist, you will be able to see that very, very informative, very, very important that you review this and home features checklist. And again, it will give you an important aspect into moving. So I am going all the way to the page where it says preparing to move. That is the where it is 2 to 3 weeks before you move, 1 to 2 weeks before you move, 2 to 7 days before you move, the day you move, and the moving day. So they have given a complete checklist for you to review, and this is very, very interesting format for you all. Okay, let's head over back to the article there. So you can go through this workbook in order to assist yourself with the change of address and get some information here. Closing day. Closing day is an exciting time. It is when you finally get to take legal possession of your new home. The final signing generally happens at your lawyer's or notary office along with the following events. Okay, let me, because lots of you have not much of an idea exactly how things go along. Okay, so now you have purchased a property with conditions, and you have 5 days in which you have to get your financing done, which you have to get your home inspection done, your lawyer review of the offer done, any other conditions in the offer, all of them have to be addressed. So now everything has been addressed. You have finally purchased the deal. Yes, so that is there. Now the closing may be 1 month or 2 months down the line. And this is how it goes about, that the mortgage broker or the lender, you go and get everything signed up there and go through all your paperwork there. The institution, the lending institution, will then send the instructions, the mortgage instructions, to your lawyer, and then you will go to your lawyer and sign up all the documents there, plus bring all the deposit money or the adjustment money that is there, and your lawyer will then be in touch with the seller's lawyer and finalize the deal, register the property, get the title addressed and everything. That is how our format is. Okay, and I'm going to read that particular to you. Your lender gives the mortgage money to your lawyer. So that is where you have gone and met your lender, you have signed up all the documents again, and everything is in compliance, everything is smooth. The lender or the mortgage broker will help you in guiding all of those particular things, and then the lender or institution will send that money to your lawyer. You give your down payment minus the deposit. So let's say suppose you were trying to give 5% as your down payment and initial deposit was $5,000. So the balance now is $20,000 plus the adjustments regarding the taxes, regarding the utility bills, regarding other adjustments that are there, and the other closing cost that you need for the land, for the lawyer fees, the land transfer, the registration of the property, and miscellaneous, and all those which formulate the closing cost from 1.5% of the purchase price to cover legal fees, land transfer, and other. So you go and pay all those amounts of money to your lawyer. The lawyer takes the money from the lender instructions, takes the money from you, and then goes in touch with your lawyer or notary, pays the seller, registers the home in your name, and gives the deed and keys to you for your new home. So that is how the whole process takes in place. We are almost at an hour mark, and let's say if we let's go fast on this one, or if we go further, then we might take more than 15 or 20 minutes after you buy. I think so. Let's restrict ourselves to this 1 hour mark, and for next venture we'll try to cover after you buy. So part 2 of step 5, we'll try to cover it on our next one, and let's see if we can get some review of this particular thing from our mortgage expert there.
I cannot comment how quickly and how detailed you went through that entire process. Nothing given in that process is deviates from reality. There are multiple steps. People forget, and I guess clients are not aware that how long it takes and how many parties are involved and what steps are needed. I've seen clients that have not taken a day off to go and see a lawyer a few days before. I'm not seeing, many things can be missed if you don't follow the systematic approach that this video provides, and everything else out there in the market. But ideally, if you were to follow these steps, step by step, you should be in good shape on the day of your closing and hopefully pick up the keys at 5 p.m. mark.
Awesome. We have numerous queries from Chantalise, and let me answer those at the moment. So I'll take this opportunity at this moment to answer her. And the first one of hers is, could a single income home sustain a household? Is that beneficial? Yes, Chantal. If the challenge here is getting qualified on the basis of your income. So let's say suppose your income was $100,000. As a single person, you will qualify 4 times for a condo, so $400,000 for that. And if your credit score is excellent, you may qualify all the way up to 5 times the income, so all the way up to $500,000. Yes, but the main thing here is, let's say suppose you are only qualified up to 300 or 400, there may not be properties in your price range. Your answer is, will a single income home sustain a household? Yes, it is. That's why they only give around between 35% of the household income that you should be keeping it for purchasing the property. Are there tax benefits as a single woman homeowner? Yes, as a first time homeowner, there are benefits, and you get some rebate as a first time buyer, and that is where it is. So it is very important for you. I am not sure that you have tax benefit as a single woman homeowner, but yes, you have benefits as a first time buyer. I'm benefiting from this video. Greatly appreciate that. Yes, we are putting this together for regarding your real estate queries and your mortgage queries, and making sure you are able to, we can assist you. The only equation I can give it to you at this particular time, we both are going the extra mile to make your buying as easy as possible, and we are addressing the rent to own homes, which is the worst case scenario. So anything else is easy for us. So more than happy to will be able to guide you with this. Thank you for your clarification with these details and scenarios. Feel free to be in touch with me, and just send me your telephone number and email, and I can walk you through step by steps and making sure we can facilitate your purchase there. I am not on PR or citizenship. Is there any chances still I can be approved for rent to own homes? Yes, if your credit is good. Let me take the info on, get the mortgage broker to address this particular one. Faisal, go ahead, sir.
So with not being on PR or citizenship, it's just a small challenge in the whole application, really. So can they be approved for rent to own? Yes, they can be. The amount of down payment matters. The amount of how the credit is does matter, and what the income is like. So all those things make a difference, not just your status here.
Faisal, so she can get a mortgage also.
It's a very good possibility.
That's what I'm saying. Depending upon her income and her credit score, and how long has she been there. She so basically we need more info from you, and it's a possibility if you have a good income to qualify for a property, and if you have down payment. Now, what is the minimum down payment if she is from, like last time I was hearing it out? I mean, there are lots of CMHC programs with 10% down. You can get a mortgage.
Absolutely. It depends on many different scenarios. I would say have the client contact you and sort of give a full picture as to who they are and what their scenario is. I don't like to answer on partial information because it's not accurate, and it's just not the best. So I would suggest them contact you or me. In general, yes, there are programs. I've seen clients buy properties that do not have PR card, but yes, that is an option.
We have done numerous
Yes.
files, I think so.
Absolutely.
We have done files
Yep.
which they were not having a PR card, and they are not even a citizen at this moment.
Yeah.
Because there are programs. CMHC has a program. Even home insurance programs are there. So yes, feel free. Walk us through more of your information, because we have done these kinds of deals, and you will qualify. So awesome for we were able to address a few of your queries there. Now, before we wind up, I will like to take on the websites that we have, and let me guide you with two of the main websites that are there. Okay, so now let me take them to the Google page. Okay, these are the two websites for our mortgage expert. This is called FaisalGarcia.com. So let me take you here. This is his picture. This is his name, FaisalGarcia.com. And if you go there, you can be in direct contact with him for all your first-time home buyer, bad credit, commercial mortgages, other mortgages. I think so you have done a wonderful job with your some of the stuff that is highlighted in the new pages of your website there.
Today I had to push to get it published. It was down for last few days.
Oh, okay. It's looking good. It's looking very good. Yes. Wonderful. And again, his second website is creditrepairnow.ca. So in case if you have credit challenges, you can be in touch with him on this particular one. And now let me guide you a few of my websites that are there. This is the program that you can come in over here. Okay, now Kay had a further query to her PR card. Is the interest rate higher than other Canadians? I don't think so.
No.
So Kay, your interest rate is not higher. The interest rate will be depending upon your credit score, and that is what it is. So it is not higher. So let's see if that gets your query addressed there. Now we have this is the website that you generally come in over to join in over the live webinar. So you can always come, and we are here every Monday 7 to 8 p.m. We have slightly extended beyond the 7 to 8 p.m. today. So this is where you can come, register us. We'll be doing it next time on 4th of February. So between 7 to 8 p.m. This is the other page. Again, these are all left in there for you, where it is all the previous webinars are listed here. And on the side of this particular one, we buy houses, power of sale listings. If you want information on zero down, cashback program, rent to own, and our webinar. And on this we have all of these particular ones, and they are from 1 to 10. And again, you can go on the other one from 11 to 20, and even this latest video will be on those particular dates. So the last item is, try to register yourself to this particular page of mine, which is called my MA in Real Estate. This is a newsletter where I curate 8 to 10 articles on a daily basis and email it to you regularly, highlighting you where the market is and where it is going. So this takes us to the end of this day today, concluding it. Thank you. Let's head up to our expert there. A big thank you to him to being here with us for answering all these important questions and queries. Go ahead, sir.
Thank you for having me, sir. Financing is such a puzzle, but I also want to make sure clients understand that financing is just a piece of the home buying process. I suggest you go through these videos, you go through all the aspects of it, because there are many pieces that go in your home buying process, and you want all these pieces to work together. Financing is a small one. Yes, it is an important one, but equally important is your inspection. Equally important are your chattels and everything else. So yes, there is some importance on every piece that is included in the home buying process.
Okay, so whatever you had said, Kay is very, very thankful to you for that. She says you guys are awesome. Thank you. Really appreciate this particular info from UK, and we look forward to addressing your real estate, and we will go out of our way to address the best possible interest rates and the best possible properties. And if you're running into any challenges, we are here. And on that note, let's conclude that. Let me just if you would like to add anything in the meantime, I'll just give a thank you to Chantel, and I hope all her queries are addressed.
Thank you. Thank you very much, audience.
Wonderful. So